What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Good evening.
Hi, how's it going?
Pretty
Can you hear
good.
me?
Yes, we can hear you great. Can you hear us okay?
Great. Yes, indeed.
Well, it's nice to meet you, Yan Pritzker. Welcome to the show.
Likewise. Thank you so much.
For those who don't know, Yan is the co-founder and CTO of SwanBitcoin.com. He's the former CTO of Reverb.com and the author of Inventing Bitcoin, which answers two questions. How does Bitcoin work and why does it exist? Let's get into it. Like, what was going on at Reverb? What was it like building Reverb? I think I heard you say that when you left, it was 500 million in sales. What was it like to build Reverb?
It was intense. It was really intense. When I started, it was just me and David, the other founder of Reverb, in 2012. When we started, it was just an idea that was based in this pain that people were having, very clearly in the music buying and selling experience, because it was just like eBay and Craigslist, which I don't think anybody's a fan of, really.
How did you recognize the pain? Were you buying and selling instruments on Craigslist?
So this was mostly David's idea. So David had a guitar store, and he was a buyer and seller of musical instruments through the store. I was more of a musician. I'd played and bought and sold instruments my entire life, just as a musician. And when we met up, he had the idea originally, and when we talked about it, I was like, this is obvious, right? Like I've sold things on Craigslist. It was a terrible experience for the most part. It was quite obvious that we could make it better. And David had a lot of experience in retail. He was running this guitar store in Chicago called the Chicago Music Exchange, which was very well known, had really nice, nice instruments, good salespeople that really knew their stuff. We wanted to bring that experience of walking into a real guitar store to online, which is different from what you would get on an eBay or a Craigslist experience, definitely.
Sure. What were some of the challenges of growing Reverb?
Well, it's, as a marketplace, it's there's always a challenge in getting a marketplace spun up, because you have this kind of supply and demand problem, right? You can't just go and start selling guitars, because where are the buyers? And if you have buyers, then where's the supply, right? So one of the nice hacks that we were able to do, because David had this guitar store, is we actually had the guitar store be a sort of market maker, right? And this was, they were buying and selling, right? So if somebody came in as a musician, like just a regular person off the street, wanted to sell something, they could get their instrument sold quickly because we had a buyer that was ready to snatch things up, and they would go and clean up the instrument and take better pictures and turn around and sell it again. And so that was a big challenge, getting that initial liquidity spun up. But as we started, getting that going, it's like a snowball, right? The more people feel like there's activity on the site, then the more they want to come back and experience that again, where it's really easy to sell something or really easy to buy something.
Right. What do you think? Any lessons learned from your experience at Reverb that you're bringing to the Bitcoin space with Swan Bitcoin and Give Bitcoin?
I think one of the things that we really did well was customer service. This was something that we really both believed in, that it's not something you outsource. You don't just say, okay, here's my call center in India, which is what you're going to get with, an eBay typically. We want to have an experience where the person who is talking to you understands your specific situation, not just from the standpoint of like, I know how the site works, but I understand why you're here, what you're trying to buy. I've been there, man. I've had my instrument broken, like being able to identify with your issues and being able to talk the talk on your level is super important. And one of the things that we did as an organization at Reverb early on was everybody was customer service. There was no such thing as a dedicated customer service department until, probably well into our second year. We all fielded customer requests. We all talked to customers on a daily basis. We actually set up a really cool email system where we were welcoming customers to the site. Now it's really common, right? Nowadays, if you go to any site, you get an email like from the founders welcoming you, right? But ours were genuine. We would actually send those out, and they would come from some random person in the company. And when our customers got on board, they were welcomed by somebody, and they had an immediate open channel to that person, and they could have a relationship with them. And we did that for a long time, and until we really built out our customer service department. And even still, we kind of did that on a spot basis. I think it's super important because you learn a lot from your customers doing that, and they feel like they actually, can talk to a human being. So we are definitely doing the same thing with Swan. I personally in the support queue every day. We do have an awesome guy named Reed who's just killing it on support as well. But
I
I'm
know
in there
for a
every day.
fact. Yeah, I know for a fact you are, because I'm a Give Bitcoin user, and you've answered my questions that I've sent to
Exactly.
support once.
So I'm just not just talking the talk here. We do interact with our customers because it's important to understand what pain points they have, and then we can actually build product, to address those pain points.
Sure. Can you tell us about Swan Bitcoin? I'm a user of Give Bitcoin, so I think Swan
Okay.
owns Give. I came into Give into February. I was looking for this exact kind of product. You guys built it for me.
Nice.
I was looking to give a present to somebody that they could control, and not just me buying on behalf of maybe their children or something. And I like the idea of it being locked up for a year. And I like the educational component to it. What has been the reaction to the education side, maybe with Give Bitcoin? .io. Can you see when people do you have metrics on when people are opening the emails? Can you tell on that side?
Yeah, we definitely monitor, how people are reacting to it. I don't have the numbers off the top of my head,
Sure.
but generally the reactions have been positive. People like the education. When Give Bitcoin was launched as a concept of like, how do we onboard people into Bitcoin? And it seemed like a really good way to do that was to get people to gift it, people who cared about Bitcoin already, to gift it to people who perhaps didn't know about Bitcoin or just weren't sure. A lot of what we do is we handhold. So people, they don't know what they got. What am I supposed to do with this Bitcoin? That's part of the reason why we have that 1 year lockup, preventing people from getting crazy or selling.
So you're getting
the first run up or the
right.
first dump.
I didn't even think about this. So, I was a user giving Bitcoin. I guess, is the majority of your questions from the recipients in your support queue?
It actually is a lot of givers, because I think a lot of givers still feel like they are the responsible party for the recipients. So they'll be like, is everything okay? Do I need to do anything for this person? And generally the answer is no, we're taking care of it. But Give was this initial idea that people should be onboarded through, people in Bitcoin who are already in Bitcoin. But we then saw this much bigger vision for just onboarding people into Bitcoin directly, which is what Swan is. And we really think of these two things as one product eventually. It's just kind of like we launched one, we launched the other. The eventual strategy here is really just to have one Swan brand, which is around the idea of buying Bitcoin for yourself and buying Bitcoin for others through gifting. But that's been actually a much more popular thing. And we've been able to onboard a lot of newbies that way.
Through Swan.
Through Swan, yep, to take control of their own keys or to keep it custodial, whatever they're comfortable with. So we focused a bit more in recent times on getting Swan really built out and getting it to a point where there's a lot of things to be done there. Wire transfers, daily buys, folding gifting back in. So all of that's being built out as we speak.
Got it. What differentiates Swan from maybe Coinbase or these other exchanges, especially for the new user?
Yeah, that's a great question. When I came into Bitcoin, which was, originally I came in 2011 and bought on Mt. Gox, which was a very bad experience, very difficult, very shady looking, right?
Is this when you bought Bitcoin at $30 and it then went to $2?
I did. I bought Bitcoin at $30
so,
and it went to $2, and it was horrible. I sold the bottom like a total noob.
And then obviously you come back to it. I think in 2016 you kind of catch up.
So I came back in 2013, and it was actually because Coinbase was really nicely done, and I thought, okay, Mt. Gox looked like this total, it was like a hacker project. I'm not sure what this is. And then in 2013, it looked like, okay, Bitcoin's getting some legs. There's companies building out nice looking products around it. So that was my on-ramp into Bitcoin legitimately in 2013.
And was really, what was the difference between 2011 and 2013? You got burned in 2011. There's complications with payment processing. I could see Mt. Gox scaring me away, I think, but what changed? Obviously Coinbase changed, but you're still interested in the subject matter. Are there more aha moments between then?
I was just working on startups. I was mostly ignoring Bitcoin. 2011, I didn't bother to really read anything. I read about it on Slashdot. I thought, okay, it was interesting. I bought some, it went down. I sold it. It's like I didn't know what I was getting into, right? And actually in 2013, it was kind of the same. I just had remembered, oh, Bitcoin was something I was interested in 2011. I spent like about 5 minutes looking at it. It seems to be going up a lot. It's at $1,000. It was the peak again. Every time, right? Everybody buys the top. Who doesn't know what they're doing? And then that's what happened to me in 2013. I bought the top again because of all the media hype around Bitcoin, because I thought it was something. But I didn't actually research it really until 2016. And by that time, when I started actually understanding what it was, I was like, oh, wow, like I get this is a total revolution in how money's going to work. It took me a while to grasp that. And by the time I did grasp it, and then I was wanting to onboard my friends, Coinbase started morphing into something quite different from what my initial experience was, which was it was a nice place to buy Bitcoin. By the time I was onboarding folks in 2017 and 2018, it was no longer that. It was like sending them to a place where they were hit with dozens of other coins, with all this like marketing around, we'll pay you to learn about these coins, turn people into traders. That's not what I wanted for my friends and my family. I don't want them to trade. It's just not smart for most people. Most people are not traders. Most people lose money trading the stock market. If you lose money trading the stock market, I'll guarantee you'll lose a lot more trading crypto. So it's not the experience I wanted for my friends and my family. And so basically, that's where Swan came from. It was thinking about how to create an on-ramp for people that turned them not into crypto buyers, but Bitcoiners. Okay, there's a difference between those two things, right? There's people who trade crypto, right? Crypto traders, people who are either professionals at it or people who are just gambling and mostly losing money. We wanted to really tell people about Bitcoin as a new form of money, a sound money, why it was important to have this sound freedom cash, and how you can, get into it and learn about it and buy some for yourself. And that's where Swan came from. It's really just the easiest way to buy on a recurring basis and bundled with great education. And so Corey and I kind of both came to that concept at the same time. Corey's the founder of Give Bitcoin and now Swan. So we pivoted the Give Bitcoin brand into Swan and started to build that out.
Yeah. It's very interesting how you come to this as a technologist. And, I think that I recently read your book, and, it looks at how physics, math, cryptography, game theory, economics, and computer science all play into Bitcoin. And it does it in a very simple and easy way to understand. And it's now, I think, my favorite book to use to evangelize. So,
thank you.
Yeah. And so I really like to dig into the book and ask you some questions about that. But what I like about it is, you're inventing Bitcoin from scratch. I never thought of taking this approach. I read it and I was like, oh, I wish I wrote this book. Not that I could have. And you'll see from the questions. But I think, that kind of approach is really helpful for new people, especially in the 1-2 punch of when I do get the chance to talk to somebody about Bitcoin. You can kind of look at it you could talk about savings technology, you could talk about low time preference, high time preference, your future self. But then, they kind of have a lot of these questions that are foundational, that are technological. And, you kind of trying to talk about Bitcoin as money, not technology. But a nice follow-up is for them to be able to kind of read about Bitcoin and how the technology works and why it was created and why we put these different pieces of technology together. So, maybe you can, I think you're an expert on this. What is Bitcoin? As a digital asset, what is the Bitcoin network and the Bitcoin client software?
Yeah, I just wanted to comment, real quick on the book. The reason why I kind of came at it from how would you invent this standpoint is because the things that I heard about Bitcoin when I first started was like, Bitcoin is sound money, Bitcoin is scarce, nobody can change Bitcoin, like Bitcoin is immutable. These are the ideas that I heard mostly from watching Andreas Antonopoulos videos, which I still think are good intro videos for people getting into the space.
Sure.
When I heard that stuff, I didn't feel that I could confidently answer why those things were true. Like, why is Bitcoin scarce? Why is Bitcoin immutable? And I found as a technology person that when I understood what the technology was doing behind the scenes, I could really stand behind those questions and really like answer them to people who were curious, right?
Sure.
And so that's why I wrote the book. And from that perspective of how would you, like, what were the problems that Satoshi was trying to solve, and how would we go about solving those problems? I mean, I'm sure his thought process was different than mine, but this is how I imagined he solved, these various problems, right? So, what is Bitcoin? It's a new form of money. I think that's the most important thing to recognize first and foremost, especially for people who are technology oriented like myself, because I spent a lot of time in blockchain land when I came into Bitcoin, because Ethereum was just getting launched at that time. There's all this talk about, democracy on the blockchain, supply chain on the blockchain, Denta coin on the blockchain, whatever, right?
Yep.
There's all these
fell
different...
down the same hole.
A lot of people spend a lot of time in that hole, and a lot of people don't come out of it, frankly. And I think it's very, especially on the technology side, a lot of developers fall down that hole, and it's very exciting to be building.
From a tech perspective, yeah.
Yeah,
I think they get excited about the tech.
They get excited about the tech. They get excited about like all these open platforms, experimentation, and that's, to a developer, it's very sexy, right? But I think if you zoom out and understand what Bitcoin is, and that is, it is a new form of money, then you start asking different kinds of questions, not like about the technology, but why is it different as money? And then when you ask those questions, you can really say, okay, well, it's digital, just like my dollars, right? My dollars are digital for the most part. They're digital in my bank account, or they're going through Apple Pay or Venmo or whatever. They're pretty much digital. But what's the difference? Well, the difference with Bitcoin is there's no middleman. Okay, that's interesting. What do you mean there's no middleman? How do we get there, right? And that's really where the Bitcoin network comes into place. It's changing, having one central entity, which is your bank or your PayPal or your Venmo, into a decentralized network where anybody can participate and anybody can process those transactions.
Right. And this problem is hundreds of years old.
And this problem, it's been unsolved until now, right?
Sure.
Thousands of years old. There's always been a central entity processing. Well, that's not true, right? When we have commodity money like gold or silver, or I can give you the gold and silver, and there needs to be no central entity for that transaction to take place. This is really a problem of digital money. It occurs primarily because we go to a digital fiat system, and then you really need an intermediary for every transaction, unless you have Bitcoin. So, yeah, I'm not sure if I answered your question there, but
well, you gotta go, you definitely answered my question. I was curious though if you could explain like what is the Bitcoin network? When people talk about the most powerful network in the world, what does that mean? How do you explain that to somebody if they don't know what things like hash rate are, or how do you tackle that one?
Yeah, so Bitcoin is, like we said, it's a digital system for transferring value, similar to your digital payment networks like PayPal or Visa or your bank. The difference is that we don't process them through one entity. We share those transactions on a peer-to-peer network. Peer-to-peer network is like a file sharing network like Napster or BitTorrent, where it's a way to broadcast your information to the world, and we can get it to a copy of that information to every computer that wants to participate. So how Bitcoin works is that anybody who wants to receive Bitcoin to their into their computer, they can run a piece of software called a Bitcoin client, and that can run on their computer, on their phone. It could be a special piece of hardware you can buy called a node. But that software essentially listens. It connects to this network. It connects to other computers that run the same software or similar software, and they all can communicate with each other, and they can pass along data about Bitcoin transactions, which is essentially people trying to spend Bitcoin or receive Bitcoin. And so if you want to be a participant in this network, you don't need to ask anybody any permission. You literally just install a piece of software or get this hardware, you fire it up, it connects to the network, and then you can generate your own identity, right? So think about a bank. If you want to transfer money from point A to point B, you need to create a bank account. You need to say, this is my name, this is my social security number, and all that stuff. Open a bank account, and then the bank will know every time you're moving money. Well, in Bitcoin, the concept of identity is really decentralized. It doesn't have anybody controlling it. So anybody can generate their own identity, which we call, basically a public address, which you can share with somebody. You can share your address, kind of like your email address, and they can send Bitcoin to that address without knowing who you are. and only you have the key to that address. Only you can then spend that Bitcoin that's sent to you.
How do you create this address? If you were going to say it to a layman, like someone who just doesn't know what you mean by I create a Bitcoin address.
Well, it's just really a button that you press. So if you have, a Bitcoin wallet, so you can download a wallet on your phone. For example, there's a wallet called Blockstream Green,
Sure. Yep, Green.
Or Hexa wallet, right? You download one of those wallets, you click the receive button, and every time you click receive, it will generate an address for you. So you don't have to worry about how that address really works. If you want to understand how it works under the hood, it's basically just a very large random number. It's just generating an extremely large random number. It's as big as the number of atoms in the universe, basically. And that generates this kind of, letters and numbers that you can share with somebody, or a QR code, and they can send money to it. But it's just like Venmo. If you've ever Venmo through a QR code, you scan somebody's QR code and you send money to them.
Right. You
don't think about how that works. You just, okay, what happened? Well, Venmo generated an address, and it processes the transaction. Bitcoin works exactly the same way, except for instead of your transaction going through Venmo, it goes through to everybody on the Bitcoin network. And somebody somewhere out there called a miner, somebody running a special, another type of special computer, will get to take that information and write it to the Bitcoin blockchain, which is really that ledger that similar to your bank that logs what everybody's doing on the network.
Well, now
we can get into that.
So what do you mean by special computer? And I ask because sometimes I'll say that, and people say, well, what do you mean by special computer? It can kind of be a little maybe off-putting because they kind of feel left out, and maybe they feel like this is a system that they can't be a part of.
So I think there's two things to say there. One is, in order to send and receive Bitcoin, you don't really need anything special. You just need Bitcoin software. It could be a Bitcoin wallet. Like I said, it could be on your phone. It could be a hardware, or it could be software on your computer. Super easy. The other side of it is who gets to add transactions to the Bitcoin ledger, right? So in other words, in your bank, when you have to move money from Alice to Bob, Alice calls the bank, and then the bank is the one that gets to write that transaction into their ledger. They have a database that's guarded by all kinds of security. They've got people, with guns and security guards, and they've got all the software, intrusion detection. That's your bank's job, right? That's what they do. So in Bitcoin, we have that same concept. We have people who guard the network, who make sure that the entries going to the ledger are correct. Now, anybody can participate in this, but it costs money to do so. In order to be a participant, like in order to be your bank, you have to have a license from the government to be Chase Bank, right? In order to be a Bitcoin miner, you don't need any special license. You just need to have invested money in these Bitcoin mining machines, which are essentially specialized hardware that knows how to take energy and turn it into Bitcoin security. And this is, I can get into what mining actually is, but it started off as something anybody could do on their computer. But the way that Bitcoin is designed is it gets more and more challenging over time to do that as more people want to mine. And so over time that created specialization. And now essentially people who are mining are for the most part larger companies with, millions of dollars invested into this operation.
Yeah, I think in your book you get into, hashing. And what do you mean by the hashing to win the proof of work lottery?
Okay, so we're going to try to, I'm not sure how deep we want to get on this, but let's understand what mining is, right? So we said that in a bank scenario, your bank, we just trust the bank to keep the ledger safe, right? We trust that if Alice tries to send $5 to Bob, that the bank is going to actually do that. They're not going to do anything nefarious because they're licensed and regulated by the government and all that kind of stuff. Now with Bitcoin, we can't have that trust. There's nobody to call or to go after if something goes wrong. So Bitcoin has a very different system for establishing that kind of trust, and it's based in this idea of proof of work. So what proof of work is a very clever idea that allows us to take something in the real world, which is energy, and transfer it into the digital world, which is Bitcoin. The way that does that is it says, okay, if you want to generate Bitcoin, okay, Bitcoin is kind of like this thing that has to be discovered. We said there's only going to be 21 million Bitcoins, but you have to dig them out of the Bitcoin blockchain. They're like hidden in there. You have to figure out how to get them out. The way you get them out is you play a lottery. This lottery is you burn energy from the real world, okay, with one of these special computers. It looks like this little box. It's got a fan on it, has a whole bunch of computer chips on it. And all it does is it essentially generates random numbers and runs special Bitcoin algorithms on it. And that's called hashing. Hashing is what they're doing is they're playing a lottery in order to win some new Bitcoin and also to commit any ongoing Bitcoin transactions into the ledger. Okay, so in other words, when people are trying to spend their Bitcoin, they're broadcasting that out, and some miner somewhere is going to try to find the winning lottery number in order to write that to the Bitcoin blockchain. And the way we're going to know that we can that transaction has actually been that they deserve this new Bitcoin is they're going to give us proof of work. They're going to show us that they actually did something very, very statistically improbable that must have cost a lot of energy to produce.
Right, but they randomly produce that answer.
Yep. So what they're doing is, so to be a little bit more clear about it, essentially when we created Bitcoin transaction, Alice is sending 1 Bitcoin to Bob. It's going to every miner on the planet, right? Anybody can be a miner. Anybody can plug in one of these machines at any time and start being a miner. So they'll get that transaction from Alice to Bob, and then what they're going to do is they're going to start adding random numbers to it, and they're going to plug it into a thing called a hash function. And that hash function generates an insanely large number from 0 to the number of atoms in the universe, and they're basically throwing darts into a very, very small bullseye. They need to hit a certain small range in order to prove to people that they've thrown enough darts enough times. So, like as an example, right now Bitcoin's worth say 10 grand. The block reward, which is what they get if they actually mine this thing correctly, the block reward is 6.25 Bitcoins. So if you mine a block, you're going to earn $62,500 approximately. So it's obviously not going to be free for you to do that. If it was free, then everybody would be doing it, right? So we want to make it cost almost as much as $62,000 to produce $62,000 worth of Bitcoin. We want it to be marginally profitable.
Can we tell how many which miner is winning the most?
Sort of, right? So when miners mine, they have the option to put in data into the block saying, hey, my name is blah, 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 and I mine this block just to be proud of it. Generally, individual miners don't do this. It's usually mining pools. So you'll see a block, which is this set of data that the miner found, and it'll say mined by F2 pool or slush pool. And that's a pool is basically aggregating a whole bunch of smaller miners and helping them mine more consistently.
Sure.
And spreading the risk. So sometimes those blocks are stamped with the pool that mined them. Sometimes they're not. So we don't know for sure, nor can we really trust that that's the miner. I mean, they
Right.
can, if they want to, put some kind of signature in there. But generally speaking, it's just, it could be anybody. That's the whole point of proof of work is we don't care who mined it. All we care is that they've shown us that they've hit this really, really small bullseye out of a huge field of possibilities, which means they burned a lot of real world energy just to do this process.
Right. How does the difficulty adjustment play into this? Pierre said on the show, without it, Satoshi could have mined all 21 million in 1 year.
Mm-hmm.
In the
Correct.
first year.
So, yeah, Bitcoin has a really interesting property in its emission schedule. So Satoshi programmed in this idea that Bitcoin would be distributed on a logarithmic curve. So what that means is it started out distributing pretty quickly. So in the first in the first 4 years, it was 50 Bitcoins every block, and then it went to 25 Bitcoins, and then it went to 12.5, and now we're in the era where it's 6.25. So it kept reducing, right? The way that we enforce that, you might say, okay, 50 Bitcoins in every block. Well, I plug into my mining machine. The Satoshi plugs in his miner, right? He's the first miner. He's got his computer open. It starts generating blocks. Block 1, block 2, block 3, generates 1,000 blocks, no problem. What's going to stop him from mining all of those 21 million Bitcoins in the first hour? The answer is the difficulty adjustment. So inside of the Bitcoin software, there is a thing that says, take a look at how fast we've been generating blocks in the past roughly 2-week period, or really it's measured in blocks, or look at the past 2016 blocks. And have we been going faster or slower than 10 minutes on average? And if we're going too fast, that means there's too many miners on the network, right? There's too many people trying to get that Bitcoin. So we have to slow it down. The way that we slow it down is we shrink that bullseye. This is called a difficulty adjustment. So we're making the difficulty higher. So we're making that target smaller. And now it takes a lot more throws of darts to get into that bullseye. So that means even if we double the number of miners and then we double the difficulty, then we're back at neutral. We're back to producing, a block every 10 minutes. So that's how we keep Bitcoin's supply schedule following that original curve. And we don't allow anybody to mine Bitcoin faster or slower than it should be mined. It's mined always at exactly the right speed, plus or minus some variance.
Yeah, I can see. So who makes the rules? The nodes, the miners, the users, the investors, the developers? I threw investors in there, but that's not the right word. But
well, it's a little bit of everything. Really, the person making it's not a democratic system. I think this is the thing that's really important, is that people all often think of democracy because that's the thing that they know in regular life. Okay, if you have 5 people in a room and they need to decide something, you might say, okay, well, what do you guys think? And try to come to some kind of, rough consensus, or try to take a vote. In Bitcoin, you can't trust anybody, right? You don't know what other people are doing. All you know is what you're doing. So in Bitcoin, each person who receives the Bitcoin makes a determination of what Bitcoin is to them. So on my computer, I run, Bitcoin Core, which is the most popular Bitcoin software. That means that I follow the rules that are set in that software. And those rules include things like there must be only 6.25 Bitcoins generated in every block. There must be valid signatures. There must not be any, spending of coins that have already been spent. All of these rules are rules that my software enforces. So if you send me some other thing generated in some other system, my computer is going to say, sorry, I don't know what this is. This looks like counterfeit, and I can't accept that as Bitcoin. Now, the miners are the only ones that actually put data into the blockchain, okay? But if a miner puts invalid data into the blockchain and my node doesn't like it, then I'm not going to take those coins. In aggregate, what happens is that people who accept coins really set the rules of the system, right? Because if you decide to accept them or not accept them, determines what people will mine. As an example, I think this was last year, some miner had a bug and they mined an invalid block that had more block reward than they should have had. And so they spent I think it was $150,000 worth of energy roughly mining that block. And guess what? They're never going to get those coins because no node on the network will accept those coins as valid because they don't follow the rules of Bitcoin.
Right.
So that's how the rules are made. It's really the people who are receiving the coins that get to validate everything. It's kind of tempting to think only the miners set the rules because they're the ones that write the data. But you could look at what happened last year as a perfect example of that.
Right.
Or what happened in 2017 while the miners trying to change the block size of Bitcoin, and the people receiving the coin saying, sorry, that's not interesting to me.
Sure.
We're not going to change what Bitcoin is.
Yeah. Before we get to maybe hard forks and soft forks, how does the fee market work?
So, okay. So basically, again, going to the bank analogy, if you're making a payment, you're usually paying some fee to the intermediary for that convenience, for them processing the payment fee. In Bitcoin, those payment processors are basically the miners, right? So the miners are, like I said, they're being rewarded by expending all this energy and writing the data into the blockchain. And when they do that, they get a reward. And that reward is actually 2 things. One is this kind of pre-programmed, 6.25 Bitcoins per block. But the other thing is fees that people will pay to get included into the block, to be within that next block or whatever, right? And it's kind of like a priority system. Think of a block as like a mail truck, and the mail truck is leaving, the station, as a certain amount of capacity in it. If you want to be on that next mail truck, you might want to pay more than other people. If you're okay with waiting for the next truck to come by when it's more empty, you can just, hold on to your mail for later. And it's just like the post office, where you decide how much you want to pay depending on how priority is. And the miners, they're not under any obligation to include or not include your transaction. It's really just based on fees. So if they see that your transaction is a higher fee, they're more incentivized to include it because they'll earn those fees. If it's lower fee, they might not.
Right. Do they win the proof of work lottery and then get to choose which transactions they get to fill the metaphorical mail truck with?
No. So the way that win that lottery is they have to compile all the transactions they want into this block, and then they're actually running that proof of work, that dart throw on all that data. So they're getting 100 transactions, and they're hashing those transactions, and they're getting.
And is each miner working on a different group of transactions that they're trying to hash and win first?
Potentially, yeah. I mean, every miner is totally free to choose which transactions they want to include. We talk about something called a mempool, which is essentially like whenever I'm making a transaction, it goes into the memory pool of every miner, right? I say I'm moving coins from point A to point B. Here you go. All these miners get the transaction to the memory pool, but each one of them can decide for themselves how they want to order them, how they want to process them, which ones they want to give priority to. If they run all the same software, it'll all come out the same, but generally they could totally modify it and do whatever they want, really.
Yeah. I came in 2017 during the hard fork times. It was very confusing.
Yes.
It was a civil war. I kind of intuitively knew Bitcoin was just, right or better. But what is a hard fork for people who don't understand? And what is a soft fork?
Yeah, I think in 2017, we learned a lot about these things. I think, so let's just back up a little bit. The idea of forking is Bitcoin is a system of consensus. So what do we mean by that? People are agreeing to the rules of Bitcoin. Rules including things like how much block reward should there be, how often should blocks be mined, how big should the blocks be. All of these things are rules encoded in Bitcoin, and breaking any one of those rules will result in that block and that coin being rejected by somebody receiving the payment. So how do we change those rules, right? If they're so enforced? Well, the answer is there are things called forks, which can change rules. Now, you can have a soft fork, which basically what it is you can think of it as being backwards compatible. So if you soft fork a new rule, so let's say, for example, today blocks are 1 megabyte. We can have a soft fork that makes the blocks half a megabyte. Now, if I don't update my software, it's still fine because the old blocks were 1 megabyte and the new blocks are under 1 megabyte, so they're still good.
And what are the ramifications to a bigger block or a smaller block?
Well, so that's like changing the capacity of the truck, right? So think about, a bigger block is a bigger mail truck, a smaller block is a smaller mail truck. Now, the benefit of smaller ones is that they can go across the network faster and result in potentially less requirements for people running, less hardware requirements for people running computers receiving these payments. Whereas if you make those trucks really big, eventually they turn into airplanes or like freight trains. At some point, only certain people have the capacity to like process a freight train's worth of data, right?
Right.
And that's kind of where the debates in 2017 were around, should we be increasing the block size, because that actually might cause more centralization. It might cause computers to start to get closer together in order to make sure that data gets there in time and all this kind of stuff. That's what that debate was about.
Sure.
We can get into that in a second. But just to kind of explain forks again, with a soft fork, it's backwards compatible. Nobody has to change their software. With a hard fork, it's like we're changing it. So now, 2 megabyte blocks are now valid. So that means if you don't update your software, you're not going to be able to get the new blocks. So a hard fork is like extremely disruptive. It's basically saying everybody, everywhere, whoever wants to participate in Bitcoin, you all have to upgrade to this thing. So the consensus requirements for a hard fork to work are extremely high. I would say impossible. A lot of people believe it's impossible at this point to hard fork Bitcoin outside of some catastrophic bug that everybody will agree to. I mean, if it's something trivial, like, can we make the blocks twice as big? It's like, no, because there's, tens of thousands or hundreds of thousands of nodes that won't change their software. So no, we can't do that. And I think if you think about it, like if Bitcoin is money, and this really goes back to what is Bitcoin? Is it technology or is it money? If it's money, do you want the government, to call you up and say, sorry, your $5 bills are no longer valid. Go to your nearest bank and exchange them for something new. Or even worse, now you need a new computer to process these new $5 bills. It doesn't make any sense. And that's why Bitcoin was, it just won't be hard forked. It's already widely distributed enough and entrenched enough that people just don't do that.
Right.
They won't change the entire monetary base on a whim. That was what a hard fork is. So in 2017, some people wanted to hard fork the block size. They thought they had consensus. They thought they had 85% of the businesses and 90% of the miners or something like that. And it turns out that a few really, really, loud people were like, no, we're never gonna change our nodes. So sorry, you could do all you want, but we're never gonna accept your coins as payment. So what's the point?
Sure.
And at the end, they called it off.
Yeah. Can you tell us a little bit about when you came to the States at such a young age?
Yeah, I came in when I was 7.5. Came from Soviet Russia, former Soviet Union. I was actually born in the Ukraine and immigrated here in '89 and was, came with my parents and my sister. And that was a very interesting country. people talk about socialism here in the United States, but like they haven't seen social. That's
Sure.
not. This is not socialism. Believe me.
Right. What do you remember?
I don't remember that much, honestly. Like a lot of what I know is from my parents.
Sure.
I was a kid, I remember standing in line for stuff. I remember,
Like what?
not having anything.
Right.
Like in Russia, you stood in line for anything. If there was a line, you stood in it because whatever you could get in that line, you could then trade for whatever else you needed.
Right.
So
That's
like
the real
bread, clothing, like everything was scarce. Nothing was abundant. Oh, caviar was abundant, actually. I had a lot of black caviar growing up, believe it or not, before we overfished the sturgeon.
Right. Is there anything you miss or foods?
I missed the
or
caviar. I missed free caviar,
right.
man.
Oh, fair enough. And what was it like coming here? Was it a big adjustment? Where did you guys land?
We came to Chicago. My parents had my grandpa had a cousin here, like a second cousin or something. You had to have somebody here to kind of sponsor you to send for you. So we had like a far relative. They got us here. We came in with no money. So this is another thing that I learned really after getting into Bitcoin. Never wondered about this in my life. I knew we were poor in America, but I wondered like what happened. It turns out that it's not like we were rich in Russia, but we were, decent. My dad was an engineer. My mom was a teacher. We were like pretty decent middle class citizens. And when we left, they only exchanged $100 per person worth of Soviet rubles because
Right.
there were capital controls, which, by the way, more than 50% of the world, as far as I know, lives under some type of capital controls today. So it's not like this problem is gone. A lot of people can't leave their country because they're going to go and lose all of whatever little wealth they have. They will be completely gone because the government won't let them port it out.
I've been thinking a lot about this story your
Yeah.
story, and I was listening to Saifedean talk about. He's mentioning his new book, The Fiat Standard, kind of like the current and the past era, and I thought a lot about your story and your parents' story, and I realized like this was the Bitcoin bet of the day.
Mm-hmm.
They traded everything they had for the fiat standard, for
Yeah.
$400 of free money, and I think I've just been thinking a lot about how much the asymmetric bet wasn't around just gains though financially. It was around freedom, like the free
Yes.
money got you freedom, and I think a lot what you've accomplished, and then you go, wow, like this freedom provides the opportunity to just do so much more.
Mm-hmm. Yeah, for sure. They gave up everything just to have like a better life for us kids,
Right.
all for them as well.
Right.
But they're really thinking of us, and
Which is a very Bitcoin thing to do. Low time preference, give up everything you have for the future generation. And I think it's remarkable. And I think it's really, I just think about how much it's probably framed your life.
I mean, in ways that I never thought of until really, again, I got
Right.
into Bitcoin, and then I was like, wow, look at economics, look what like these kind of systems, socialist type systems have done to the world. And it's not like, I think after reading Safe's book, I was really convinced of this. I always knew that, communism was bad. It didn't make any sense from a human standpoint. But I think his critique of it was really good, because he wasn't saying there's a problem with the central planning. What the problem was that the prices were not allowed to, you weren't allowed to communicate information with prices. Right. And that's what caused all the shortages, right? Like, there was not a lack of potatoes in Russia. There was not a lack of bread and milk. I mean, we had tons of natural resources. We had tons of workers. But once you start to take away the ability for prices to communicate information, now the market just breaks down. And now it's the government saying, okay, these guys go over there, farm the potatoes. We ship the potatoes this way. They're trying to coordinate everything. They have no idea what the prices of anything should be. Jeans from America would cost you a month's salary. But you could get an apartment for almost free as long as you could wait for, a year or two. Right. So none of that makes sense, right? If you just let prices work themselves out, then the communication travels through the market provides.
Right.
Soviet Union just failed horribly on that front because they were unable to let prices do their thing. And I think Safe really points this out, that we all understand this. I think most people understand that the price controls are bad. And yet we allow, things like central banks to set the price of money, which distorts all markets, not just, the potato market, but like all markets. Capital markets are distorted by this, which is a huge revelation for me after reading that book, and really sold me on this idea that we should have money that nobody can mess with.
Yeah. I wonder how much just you coming here at 7 and giving up everything has played into your, you go to technology, and that seems like more freedom, more asymmetric bets. It seems like you've been in that mode since before Bitcoin, just a little bit.
Yeah, I mean, I don't know. I think I was definitely influenced heavily by my dad, who was a programmer. All of it. I mean, he was a civil engineer in Russia, but he was always in computers. He was kind of on the forefront of that.
Sure.
He got me my first computer when I was 7, so
Right.
or 8 or so. Definitely have to thank him for that. But yeah, I always was interested in freedom technology. I was like in this, I was in the Linux scene when I was growing up. I was in like the hacker scene for a while. Always interested in kind of libertarian ideas. I never considered myself a hardcore libertarian. I'm surrounded by very left-leaning people, generally speaking, in my community. I'm probably left-leaning and probably way more than most, people in Bitcoin are. But,
yeah, I've noticed that on Twitter, and
Yeah.
it's a nice balance, because you're coming at it from just a different side, and there's not a lot of people speaking up for that side, and I'm not taking sides. I'm just saying it's nice to have a conversation, and you're part of that.
Yeah, I mean, I'm not like I think left and right is just a stupid division,
Yeah.
and especially in this country, and especially to the point where it's gotten. And I think what's really much more important is like freedom versus not freedom, and
Right.
that's always been my angle. It's like, I don't like Trump not because of his whatever. Like some people like him because of this or that. Like to me, he's not a guy who's about freedom. He's a guy screaming law and order on Twitter. So that tells you everything you need to know.
Yeah.
You need to type anything in all caps, you might have an authoritarianism problem.
Right.
That's my take on it.
Fair
Now,
enough.
I don't know if the other guy's any better. I don't know that. But that's why I don't really get into politics. I'd rather just, work on Bitcoin. Because
Yeah.
I think fundamentally the issue is that all these politicians are fighting over this like 1% of the problem, where the 99, like the iceberg, they're fighting over the tip of the iceberg.
Yeah.
Like, how are we going to melt that tip? Where the rest of it is really the money. The
Yeah.
money's broken.
Yeah.
So, yeah.
I hear you. Have you been back to Russia?
I haven't yet. No, I've kind of traveled a lot and missed my boat to go there. Now I have kids, so I have to wait now for them to get a little older so I
Right.
can go there meaningfully with them.
Sure. What do you make of relations now with Russia, or Russia's place in the world? Is it a superpower to be?
I mean, I don't know, man. I mean, Russia to me, it's always been this like Tsarist whatever mode Russia was in, it's always the same. It's always authoritarian. It's either Tsarist, communist, now it's Putin. It's always been a dictatorship in one form or another for the most part. I think it's like firmly ingrained in the culture. And it may just continue that way for indefinitely. Which is unfortunate. And I know a lot of people there who I don't know a lot of people. I know some people there who live under this and are persecuted for various things. And it's like it's horrible. So I really think that I mean they're going to have a large role in the world. They're a big country. They have a lot of natural resources and they have a lot of wealth. And it is what it is. But I want to give people a way out of countries like that to countries that maybe respect their freedoms a bit more.
Right. I hear you. I want to turn to hyper-Bitcoinization. You tend to have a more tempered view on that as well, which I appreciate. What is your take on where things I'm going to draw it out a little bit longer, over 20, 30, 40 years. Where do you see Bitcoin going?
I mean, I think it's really hard for me to be like, to say that Bitcoin will just die. I cannot see it. I mean, I know I'm in the space, so maybe I've got like rose-colored glasses on, but I just don't see Bitcoin going away. And the way, if Bitcoin's not going away, then what, right? So the number goes up, the more people buy Bitcoin. We're already seeing a corporate Bitcoin standard emerging. After the Michael Saylor news, with MicroStrategy buying almost $500 million of Bitcoin. Now there's all these companies coming out of the woodwork saying they've already done it or are planning to do it as well. We're definitely seeing Bitcoin be adopted as a corporate treasury asset. I think that's an easy bet. Over the next 10 years, we're going to see that happen in a big way. We probably will see some countries come out and say they've been accumulating Bitcoin, whether it could be like the bad guy countries. It could be the countries that, have really bad human rights records and who seized it from their miners. It could be countries like Venezuela. But we'll probably see it, right? We'll probably see some country out there getting wised up to this, especially if they're poor and especially if they see Bitcoin as a way out. We've already seen people talk about mining on nuclear in Ukraine and other places like that. Whenever they have a problem and Bitcoin solves it, they're going to use it. You better believe they're going to use it because it's going to be a solution for their problem. And eventually that's going to lead to countries and companies and people all holding Bitcoin. How long that takes, I don't know. I mean, it could take 10 years, it could take 20 years. I've always been conservative only because I like to be pleasantly surprised. I'm well aware of, like, I always point this out, this 1995 Newsweek with Cliff Stoll saying that the internet's going to die and not go anywhere. Because, it'd been around for 20 years by the time that he was writing this article. He's like, the internet's 20 years old, it's gone nowhere. E-commerce is dead. This is never going to happen. And it's an exponential trend. So of course it looks like it's not going to happen until it does really, really fast. So I'm well aware that I could be totally wrong and saying that Bitcoin will take a generation to permeate. It may be way faster, and it may be in different ways, right? I think a lot of people, when they talk about hyper Bitcoinization, they imagine, all of us using Bitcoin day to day for every transaction. Bitcoin's the unit of account. That might not happen anytime soon. Maybe that'll take a long time, but it could be that Bitcoin's on every corporate balance sheet within 10 years. It could be that it's on half the country's balance sheets in the 10 years. That could happen. It could be used for, country to country trade settlement without grandma having any Bitcoin in her wallet. That could all happen. So I think I'm more bullish on those things happening than I am in like Bitcoin reaching every single person on the planet before that happens. I think the people tapped into the wealth and the knowledge are going to be the ones that are doing it first. I mean, obviously you got, guy like from MicroStrategy buying $500 million of Bitcoin. You and I aren't going to go and be able to do that. And, let alone somebody in Venezuela. So those are the guys that are going to get the Bitcoin first.
Yeah, that makes sense. It's interesting. You started Swan about 6, 7, 8 months ago. Right in the middle
we launched in March.
Yeah. Tough time to launch. Maybe the best time to launch.
So, it felt insane.
Yeah. So what has it been like now, 7, 8 months later, from a, not just launching the business, but launching the business in this environment? Has there been pros, cons, maybe more pros than cons? I'm not sure.
I think it tempered us. Like, it's like we've been hardened in the fires of Mordor. It's like it was the worst possible time to launch anything, probably. I mean, we launched that on, I think it was March 23rd, which was probably like a week after the market just totally tanked and died.
Good price for your customers.
Yeah, absolutely. And I was supposed to fly to New York to be on Cheddar TV, and like the night before, I was like panicking. I was like I was having a nervous break because I was like, I think this is really important for my company. I need to go to New York, but like they're shutting down everything over there. If I go over there, I probably get stuck over there. I won't see my family. I got kids. Like, this is messed up. Corey called me up and he's like, dude, don't go to New York. This is crazy. Everything's being quarantined and shut down. Just don't do it. And he was totally right to do that. And we called it off, and I was able to make that appearance over the internet, thank God. But we launched it in this insane environment. Everything's tanking, everything's on fire. And here's the interesting thing: people start becoming very interested in Bitcoin at this time. All of my friends who had been trying to get into Bitcoin for the last 2 years, they start coming out of the woodwork. They're like, "Is this a good time to buy Bitcoin?" And I'm like, "Finally, people are waking up." Why now of all times, right? Like it's the middle of this pandemic. People are finally starting to realize that something is wrong. They've been lied to in these ways. Money is broken. The stock market's thinking, like, what's happening? And instead of panicking, they're asking if they should buy Bitcoin. Super interesting behavior. And I was really happy to see it. And I was like, yes, absolutely. Buy Bitcoin. Let's go. So we actually were able to onboard our first set of customers really well. People were online, were relatively calm. Nobody was panicking. The Bitcoiners, low time preference. They're working on building their stacks. So, I think if nothing else, we just got really used to working remotely. We never planned to be an in-person company. We're all distributed anyway. We work really well on Zoom and Slack and all that kind of stuff. And it's been fine. It's been great.
That's awesome. I really appreciate your time this evening. Where can people find you? How do they get to Swan and give Bitcoin?
Yeah, so Swan is at swanbitcoin.com. Very easy. We have a weekly live show, which we call the Swan Signal, and you can catch that on our Twitter. We broadcast it on YouTube, Periscope. I don't know where. We're everywhere. But we also have a blog called the Swan Signal, where we put out episodes and interviews with people. So swanbitcoin.com/signal for that. And you can find me at Twitter. It's SKWP, pronounced Scoop, SKWP. And you can get my book, Inventing Bitcoin, on Amazon and Audible. It's in audio format now, thanks to Guy Swan for doing that. It's really, really awesome read. super short, and I really recommend sending it to a friend.
Yeah, I recommend it as well. It's a great first book for pre-coiners and some no-coiners. It's a great book. Well, for all no-coiners, but it's a great book. I really appreciate it, Yan.
And for altcoiners, awesome. Even for that special altcoiner in your life.
Fair enough. I agree. I agree. It's for everybody. It's really great. Thanks so much.
Thanks. My pleasure. Thank you.
I want to thank Yan again for coming on the show and sharing his experiences on the Bitcoin Matrix podcast. And thank you for listening. If you dug the show, please vote with your thumbs and leave a dope review. That's the best way to spread the word. This is Cedric. Peace.